Welcome back to the channel, and welcome back to another backtesting video. So we're going to continue from where we left off. We completed, well, I say we completed Tuesday. We didn't sort of quite complete Tuesday, but nonetheless, let's just have a look. I think we got to lunchtime, so let's just have a look at how price action continued. So, I mean, at this present moment, price, before we continue, is there an opportunity potentially of higher prices? There is. I don't particularly like it, just based on the fact that the hourly purge has happened so far away, and we've seen the displacement through. So that would suggest to me that we're going to continue lower, at least to see liquidity below the previous day's low. So let's just upgrade this to 5 minutes, and we'll just play on just a little bit before we get into today's price action. Well, not seeing anything move, are we? Let's go down to the 15. Like literally doing nothing. Lovely. Lovely jubbly. Let's refresh this page. Oh, balls. Okay, let's go back into that. Okay, looks like it was, no it wasn't, sorry. Let's get that back. So is there a reason why we're not seeing? Let's just, so that's a 1. There we go. Okay, so yeah, so for me, I wouldn't be looking at this as a long. I mean, there is displacement in there, and but the reality is because of the lack of the H1 purge, which is so high up. It wouldn't surprise me if we're going to trade into an imbalance and continue lower. Now, the reality is we should see that from here. So let's just drop down to the M15 liquidity purge here. So let's have a look. You never know, it might even present a cheeky little setup. Okay. Okay, so that's the overlap. So we'll drop down to the M15. So we've obviously got the M15 liquidity purge. So have a bit of coffee. So all of them have now traded up into it. So there isn't no, as far as I'm concerned, SMT. So we can continue. And that could now be the you've got SMT here. I wouldn't necessarily want to take that. So we'll continue on the M15 and just see ES purge the low if it's going to, which it should do now. Taking a look, there you go. Okay, so there we go. All right, so I'm going to, let's go to the next session, see what happened, and obviously we can see now how the market continued lower. So yeah, that this isn't something that, you know, I would want to engage in, but as I said, you're always entitled to. If it fits your model, then you should. So I'm going to go to the next session. We're going to go to one more. Okay, right. So here we are. So first thing, I want to go to the H1. I just want to clear out a lot of the I didn't actually want to clear that out. Not that one. Reason why I didn't want to clear that out is we would see true market structure shift, rebalance there. So if we trade above that level, then that would indicate true market structure shift. So I want to keep that one in there, but everything else I'm just going to get rid for the time being. So I want to, as clean a chart as possible. We can get rid of the previous day's low. It's been purged. And we can get rid of that one here. Let's just look above the marketplace. So unfortunately, as I said, this was we were unable to. This setup formed well before. We'll get rid of this as well because it's likely to be the high of the day. Okay, and that there. Okay, and finally that, and that one. Okay, so I'm going to venture back out now to the daily first. Well, actually, let's just go and clean up the H4. Okay. Right. Okay, so now I'm going to go back out to the daily. And we want to see. We can. So that actually turned out to be high time frame. No SMT. But it just formed early. Okay, so then Q, and then we can just make this SMT. Now that doesn't mean that this is not going to get purged or price wouldn't come back up to it or anything of that nature. It just means that a level of reaccumulation of shorts took place and we had a cracking correlation. Okay, so want to remove this for now. Remove that as well. Okay, so let's just stretch this out. Oh, no, that can go. Okay, so we're going to see where we are. Right, so that's today. So order flow remains bearish. I'm just going to put this in, although we anticipated that that would be a breakaway gap. go. So we'll leave that as that. All traded up into the daily civvy and then rejected. So to me, there's nothing to add other than this larger SMT which has formed at the lows. But I would want to see a more near-term cracking correlation before I support any move higher. So I want to drop down to the 4 hour just so we can start looking at price action. Just want to get rid of that. And we want to get, sorry, let me get rid of this. Okay. And, sorry, apologies. We traded through the BPR, but the BPR is now here. No BPR here, but we have so we've got a couple. I like that one. It's obviously a tiny BPR there. Don't have anything there, but we do have this one here. So just want to make sure I've got the charts as I would like. It's my so that's looking at this imbalance here, which has occurred on all three. I will mark it, but not necessarily 100% sure on it. But at the same time, it is the first imbalance which is in the leg. So let's get our highlighted tool. So we've got Tuesday's low, high, high, low, low, and high. So we want to reference those. And here, so let's get those in. And there. And finally, this one here. Okay. Bit of coffee. So we've obviously got this daily range. Where ultimately rebalancing took place. So if we look at NQ, oh, it's curious to see. Okay, so the imbalance above 50%. That's fine. Okay, so I think I just want to double check. Okay, so I'm happy enough with that. So let's start our this is for Wednesday 27th. Okay. IOF. So again, we want to venture out and have a look, observe the daily and the weekly. So weekly is very much bearish, although we are seeing that, which I could have noted earlier, but I do want to see that in combination with for that to really affirm anything to me. I need to see that with another cracking correlation at the lows. Okay, so and also the daily is bearish as well, so let's make a note of that. So relative to the weekly and daily TF, IOF remains bearish following the high time frame displacement, which was initiated by the high time frame cracking correlation, and then further reaccumulation from the CB CB daily. Okay. Furthermore, I had noted the likely breakaway gap, which indicates strength to the downside. Bear with me. Sorry, I just saw a message which just made me chuckle. Okay, let's continue. Okay, so I think there's a couple more points that we want to touch on. So obviously we've seen the displacement through the old low, so we want to note that. Now we have hit a rather key inflection point, so this could quite easily support a short-term reversal. Quite easily it could, but we need to see evidence of that. But for the time being, in terms of order flow, which is what we're concentrating on, old highs are being manipulated whilst old lows are being displaced through, which we've seen. Bless me. Sorry, let me just go back to... Okay. I might have to sneeze again. It's gone. It's gone. So with that, I'm happy enough to confirm currently IOF is bearish. Would need to see support of anything to the contrary. So ERL, IRL. So again, if we look at the weekly narrative, so we spoke about the potential breakaway gap, which we noted, but more so following the balanced price range and the high time frame cracking correlation. So we're going to make a note of that. Following the confirmation of the BPR weekly. Oh God. Supported by the high time frame cracking correlation at the highs, our attention turned to the old low weekly, external range liquidity. Okay, now should the market confirm and high time frame cracking correlation at the lows, ideally supported by a lower high time frame cracking correlation, this would then turn my attention to the SIBI weekly. However, currently the focus is the old low. Okay, not changing from that yet. Now if we go to the daily's supporting that as well. So this is also supported on the daily time frame, where daily imbalances are rejecting price, supporting lower prices. Okay, so we'll leave. So that's that. So SPs. So we drop down now to the 4 hour. Now we're going to get into the nitty gritty a little bit more. Get rid of that. Okay, so we've seen price trade through. Oh God, my machine's going slow. This SIBI here on ES and NQ. So that could indicate short-term move higher, but we also know that the market could trade up into a discount before returning lower. Okay, because order flow is still bearish. So SPs, let's just make a note. I've noted the clean and clear swing points above and below current price, referencing the previous day's high and previous day's low. Okay. These two key price levels have formed either side of the true week open on all members supporting the idea of high probability trade ideas if coupled by an high time frame cracking correlation. Furthermore, this is where near-term liquidity is residing. Okay. So TO, currently all members are trading below their respective true week open, supporting the idea of high probability longs. Now again, that's not just a definitive, oh, we must buy because we're below the true week open. That's not what we're saying. We're just saying that if coupled with other confluences supporting a high probability trade idea, then and only then would it support potential longs. So cracking correlation, I noted the high time frame, the PDA SMT from the CB H4 supporting lower prices. However, with price now purging a key time-based liquidity pool, I will be waiting for a new high time frame cracking correlation to form to support a potential trade idea. Okay. Oh. Okay, just bear with me a second. Okay. Just have a bit of coffee. So now we want to focus on potential game plans. Stretching this out. Just want to see more of the chart. Okay. All right. So let's commence. Got this low here. Quite obvious. So that's the London low. And I think that's the key hourly liquidity pool. Okay, and then we've obviously got this high here, which is the London high. that's been purged. Potential. Okay. Right. Okay. So we've got these two levels. So we've got the highs here. 104.25. What's the low here? So that's an overlap there. So we're not looking at any imbalances here at all. And we obviously have that high time frame cracking correlation at the lows, but to seek higher prices. So okay, I personally let's have a so it would be there. Yeah, so there isn't anything. So we've got that one and we've got this one. Okay, so I'm not looking at anything. So one. Sorry, actually. So with order flow bearish, and sorry, let's just go back to the H4. Okay, so again, this would need to form inside of a you know, the time window, trade execution window. But I will mark this level here. I just want to make sure, yeah, we've got the same one. So we can see how this is traded through. My mouse playing around. Okay, fine. So potential here, if we wanted to see lower prices. However, I would much prefer that cracking correlation occurred between ES and NQ than between any of the others and YM, if I'm being honest. Okay. So the reality is so I'm just writing with price being below the true week open and currently weekly / daily IOF being bearish, if the market forms either PDA SMT or hold on, let me just have a quick think. Yeah, okay. Or high time frame SMT at the imbalance. This could support the market seeking lower prices. That's one. Two would be again with price being below the true week open, and I'm just going to copy it from the previous one just to save me typing. Basically the order flow being bearish. And currently weekly and daily order flow being bearish. If the market rejects the CBH4 symmetrically with a confirmed bearish breaker H1 or M15, then we see displacement. Sorry, then we see H1 displacement if the market forms either a PDA SMT or low time frame SMT. This could support lower prices. So that'd be two. And obviously we saw market trade into here, but we didn't get no SMT. Otherwise we could have potentially have taken a trade for lower prices. Now three. With, sorry, let me just, with price being below the true week open. So this is why this is number three, because it's against order flow. So if price being below the true week open, if the market forms an high time frame cracking correlation at the lows, previous day's low, coupled with low time frame confluences, this could support this could support higher prices. Leave it at that. Okay, so they are the three models, and I just want to just double check that I'm not my machine, I'm not leaving any other models on the table per se. No, that one wouldn't. No. Okay. No to that one. Okay, yeah, so happy enough with where we are. Okay, so let's drop down to the I just want to just double check the Asian range. That's fine. could see a cracking correlation here. Just make a note of that. Oh, bear with me. There we go. Took its time, but got there in the end. So I want that on here, which will draw this one out just because it's clearer. But also what we can see is how that one got purged, forming low time frame SMT, but I'm not taking that because it's not coupled with any high time frame. So anyway, moving on. Let's we know that we've got no news, so we just want to mark up equities open. Okay, and we've obviously got our potential models. So first and foremost, let's get to sorry, just before we begin, let me just have a bit of coffee. There we go. Okay, so I'll play. Yeah, let's just put that back to 0. Will it let us? No, it's got to stick at 1. Okay. So let's play through. So we obviously had cracking correlation here. Markets display slower, but that's fine. Okay, so below now the market is below the true day open, so this is now we've got stacked confluence here in terms of longs. I would still want to see cracking correlation at the previous day's lows. But currently looking unlikely, but we'll see. I'm going to just drop back out to the hourly, see if we've got new hourly liquidity pools form, which we have. So the reason why I'm marking that up is because H1 liquidity purge for a high time frame trade setup is important. It's a key component of my models. Therefore, it's important to more so the time-based ones. So when I say time-based, I'm referring to London high, London low, that sort of thing. Asia high, Asia low. They are far more significant, but in terms of a high time frame potential setup, then an H1 liquidity pool is important. Okay, so currently trading inside of the range between here and here. Approaching equities open. Should start to see some volatility kick into the market. Okay, so I'm going to drop this down now to the 1 minute time frame. We'll play on. So we're getting towards equities open. I want to see which side the market wants to attack. Or remember, institutional order flow is bearish. So, but I want to just jump back out here. bars whilst I've been jawboning. See, H1 liquidity pool is all the way down here, so I'm not really a fan of this. There is H1 liquidity here, but it's quite away. We've had, you know, a good at least 3 candles close and stuff above here, so I want something a little bit more. And we've got this cracking correlation here as well, low time frame. So we kind of got, if you will, two, but again, sort of occurring pre-market. H1 order block here. H1 imbalance as well, so let's mark that up. So sorry, excuse me. It's actually a BPR in there, which I will mark up. It's important. I'm just going to overlap that just so we've got visibility. There's the BPR. Okay. So potentially that SIBI there could be a trade idea, potentially. And we've got that there. Obviously we've purged the short-term low. So let's go back. Oh, sorry, hold on. I'm just going to extend this out a little bit more. Okay. I just want to keep an eye on this key price level, that's why I'm just noting it. Okay. So we're going to drop back down. See what equities. Okay, right. So drop down to the M5. Sorry, no, I want to stick with the M15 a second. Let's have a look. It's the high of this candle, 89.75. So we've got relative equal highs here. So let's see what transpires. We'll continue. trading lower. Okay, right. So I just want to venture out now to the hourly just to have a look. We've obviously got the BPR here. It's certainly looking as though NQ wants to go and purge some liquidity at the highs. Okay, so what I want to see, I'm going to drop down to the M5. Let's see what transpires. Let's go. Okay, so we're now at the BPR on ES, which is going to be key. Okay. Okay, so we're certainly looking at potential high price. I just want to get rid of this for now and get rid of this. And I actually want to jump out to the hourly just to have a better view of what's going on. So price has traded through this CIBI. So now we've created a balanced price range, essentially the other way. We've traded through this level here, so let's just remove those for the sake of this now. It's appearing to trade through the BPR, so we can disregard those. There's 15 minutes left of the hourly candle, so the likelihood is it's going to form a BPR for higher prices. Not seeing a crack correlation at the lows. Potentially something at the highs, but let's just play on to the 10 o'clock hourly candle and see what we get. So we've seen a purge of liquidity. So this is the 15. So I just want to jump out to the 4 hour. Markets have traded into, let's just get rid of these for now. So we've seen symmetrical price action now at the CIBI. Okay, so we can get rid of this. We don't need that. So now the question is do we see H1 imbalance? There's no cracking correlation at the highs. Well, I say that there isn't. There is in the form of the low time frame. So if we're analyzing this high, what we can see, let's just get something to mark this up. I'm gonna have to use this partial. Now, market could quite easily continue higher just because it's started to reject does not mean yet that that's what it's inclined to do. Just going to open that out a little bit so we can see. Balance price range is not confirmed yet, but inversion fair value gap is. Potential rejection from the H1 CIBI here. So on the M5, do we see? Sorry, let's just. Yeah, okay. Do we see M5 displacement? That's what we want to see. Yeah. If it confirms the order block. Which it hasn't yet. So now so I was just checking the weather outside. So I want to jump down to the M5. Okay. So I want to see this candle close, which is the 10:05 candle. Okay. So we've now got this M5 BPR. Okay, and we've got obviously we've got the imbalance as well, which we'll just mark up because the imbalance is the lower part. Okay, so we've got that. I just want to pop out to important that we okay, so just check the M15. We have confirmed the M5 order block, which was the highest up close candle, but we needed to obviously wait for displacement. So I'm just going to mark this up as well. So technically that's the extreme. But important to note that the cracking correlation is actually with YM. So although we've got to monitor YM to see whether actually YM's just confirmed it's OB. So looking at, so let's just venture outwardly. Market has traded up into this civvy aligned, rejected, bodies of the candles haven't closed inside, breakaway gap potentially, although would expect to see an hourly liquidity pool hold here. Hourly market is purged liquidity, taken out hourly liquidity. YM had already done so, dropped down to the 15. Market is inside of this bullish bullish BISI, sorry, but we can see that YM has sort of traded through its own be surprised if it finds now support to trade higher. Therefore, it's likely that an hourly liquidity pool is to be targeted. So we have confirmed the order block. We've now confirmed the balance price range, M5 balance price range. Might be able to take a off this candle here. Let's just have a look and see what we could be playing with. So 1R, if we could get down to here, maybe break even. Two R about there, maybe 2.5 down to here. So I'm happy enough to take this because we've confirmed the order block, we've traded away, and then we've confirmed the confluence, the market wanting to trade lower. So just want to make note. Let me just check NQ. Yeah, no, I'm happy to take this on ES. I just want to actually venture out. I just want to check something on. Did kind of go quite low through its. I think a reduced risk trade would be. Where are we? So we're inside. So that would have been the CB. We traded through it. So I just want to just double check that we've taken H1 liquidity. I'm happy enough because we've taken H1 liquidity. If the market wants to trade higher from here, then that's fine. But sort of just double. So we've taken H1 liquidity. So we've traded up into H4. Sorry, let's just go to the H1. Okay, let's just do that. So we've purged liquidity ultimately, whilst YM has traded up into a liquidity pool. So we've traded up into a high time frame balance, taken H1. The question is whether we. Bear with me 1 second. Okay, I'm back. I think what I'm keen by the nature of this model, because we've traded up into the CBH4. So let's I'm going back to my model. I'm going to wait for the M15 order block here to confirm. Once that confirms, which is the model, so we've traded up into the. It's a really interesting one because technically speaking, the SMT here. Let me just go out to the SMT itself is not high time frame. It's not high time frame SMT. It's actually low time frame SMT. So, and we have traded into a low time frame imbalance. Now, if we looked at this high, which wasn't purged here, as we can see, but was here, I think a lot of things are supporting potentially lower prices. I am happy to take this. Okay. Because of the liquidity that's been purged, we are in a H4 imbalance overlapping with a H1. It's one of those you'd end up kicking yourself if you didn't take it, but I think that you'd have your stop at the BPR. We're gonna take this. Now, risk percent. We're going to take this on reduced risk. Sorry, we got it here. Because of it's sort of between and betwixt. So I'm going to take this on reduced risk. We're going to do market sell. Yep, all that is fine. So we're going to save that. Okay. So we got that in the end. So we're going to click through. Sorry, where are we? Okay. So we are looking initially for this level there. That's what I'm looking for to move to break even. Now let me just go to the M15. Alright, we'll just leave it for now. Okay, I think this candle's about to. Okay, so I'm going to move the stop loss to break even. We've moved through 1%. So we're just going to we'll just drop it there, that's fine. Okay, so we're risk off. So the reason why I went 0.5% was because I was between and betwixt between two models. Because technically it's one model, but it also technically kind of qualifies for the other. Although the imbalance that I was anticipating was not that one, but the framework of the trade was between two models. So that's why I took it on half risk. So now if the trade comes back and takes me out for break even, that's fine. Now the key is ultimately this London, I believe that's the London low. Let's just go out to the H1. Yeah, so this London low here is the next key inflection. Now, if we're looking at H4 inflection, I'm just going to actually that there, and I'm going to do this because because this is why I want it to be at break even, because the H4 inflection point is here. And from this point here, it's very plausible that the market could reverse and go higher. That's why the London low, or 1R, if you will, was important. Now, we've obviously got the BPR here. The market has continued to displace lower, violating the imbalances, but ultimately here would be the the next point. So we will continue on. We've obviously got some imbalances which we've marked up, but again, because of the BPR, that was one of the main reasons why I was happy. Now, why did I take a market order? Because the market had already validated the bearish order block, but it hadn't confirmed yet the M5 confluences of displacement. So I wanted to wait for displacement to confirm, which it did. Once that did, and in my opinion, the highest type, if you will, of imbalance is a balanced price range, which is here. That then confirmed the opportunity of getting into the market. But I've taken it on reduced risk because, like I said, it was between two models. If we had a high time frame crack and correlation up here after taking this H1 liquidity pool, then I'd have taken it full risk. So where's 2R? Two R is there. That's the H4. YM. So I'm monitoring YM because that's the one closest to its previous day's low. Now, I'm also monitoring them because let's just have a look at the M15. Nothing to do yet on the M15. So because so we've just got this huge inversion fair value gap here. M5 imbalance, which they've traded into. If this comes back to for break even, then it comes back for break even. Potential low time frame SMT there. Want to see this candle as low close. So if we just mark this, okay. Oh, let me just sit up a little bit. Back is aching just a tad. Okay. So I'm just I want to grab that. So like I said, I'm monitoring NQ and YM because those two have moved considerably lower, and I want to see whether there's appetite for lower prices. Okay, so let's continue, and that's a really good sign. I just want to check the M15. So 2R is here, but now I think it's a time to I think it's a time to take off, because this is a point now where we could see the market reverse, because technically speaking, a high time frame crack and correlation could form here because of one taken. So then we're going to take off. We'll take off. Well, hold on. Best thing to do is. We want to take off. Hold on. So I'm sort of keen to just take off 50% here, which I think is fine. Take off 50% and then I'm going to trail stop loss a little bit. Now I would normally trail the stop loss on the M15, but because the trade was taken on the M5, that's the reason why. Okay, so 50% has been taken off at approximately 1.4. So we want to see this now sort of kick on, if it can, close to. Okay, so 2R being here should be good. So let's continue. Oh, so we've seen the first sign of rejection now, which that's interesting. So now we've seen the first sign of rejection. I want to grab my stop loss and just bring that there, top of that candle, because that BPR is huge, right? So there isn't really anywhere to sort of place that. So I'm going to use the M5 structure to manage that, and then we'll see what happens. But this is where we could see, as far as I'm concerned, if we were anticipating a trade idea back the other way, this is where it could likely occur. So if we go out to the 4 hour, we've obviously got the previous day's low here, as we can see. So let's just do some of this, because you never know, we might get a 2-for-1. Now again, I would much rather see that cracking correlation with YM, but if the market closes above bullish order block on ES, and so if we just put this here, which is that. Oh my god. Okay. And it's this candle here. Okay, so we're going to monitor that. BPR up here could just be coming back into the imbalance, because like I said, it was a key liquidity pool. That's why we sort of framed it that way. So let's see where we go. Okay, so this is now very likely looking BPR here. There's no displacement yet on ES, but so we should be taken out now. There we go. So the trade, our trade itself was probably around 600-700. Let's have a look. 737. So not a bad little trade at reduced risk. So you know, if you wanted to, if we took that at full, it would have been 1.15, but that's not what we're here. We're here for capital preservation. So what I'm going to do is I'm going to open the journal, move it to the other screen just because it kind of, so you can see the what's the date? 27th. Oh, I don't know if we're able to hang on, let's close that. If we open this, close positions, journal, there we go. And then if I just move that to one side, minimize that. That was the trade. So let's just put some notes here. In fact, let's use that. And bottom left. So partial 50% there, and then what we'll do is we'll just say that here. Now what would be annoying is if we've just moved our stop loss too soon. Okay, so that's where we want it. There, okay. Take that picture. Good, and right. So, in fact, I'm just gonna put some details in here. So this trade was taken at reduced risk following the market being between two models. Market traded up into the CBH4, purging H1 liquidity, forming low time frame SMT, before repricing lower. This the market initially confirmed the the bearish high probability OB M5 before then confirming the M5 confluences in the form of the BPR M5. Okay, and that is that. Cool. Okay, so I'm going to close that, but what we are going to monitor is, do we see this? I'm going to take this off. I need this, and I'm going to just take that off and take that off. So we've seen potential SMT at the lows now. We've got it's not confirmed, but it could well be a BPR. So on the 5 minute, I just want to see, so potentially, do we see any displacement? And the likelihood is yes. Which is in that area there. So we've got a BPR there. We've got displacement here. Okay, market clearly looking to violate this M5 CIBI. And also, if we look at here, and we've also got the BPR there. Cool. So guys, I'm just going to go to the M15. Okay, so guys, that is going to wrap up this session. If you want to know whether I take that trade, well then join me or watch the next recording of my backtesting session. See whether I take that trade or whether the market creates something to invalidate that trade. I mean, the huge BPR is obviously an initial red flag potentially, but if the high time frame um, models support a trade, then so be it. But we took a trade short. As I said, reduced risk. Took decent $750. Hopefully, we was looking for more, but we managed the trade accordingly. We took that, and now potentially we're seeing a high probability trade form at the lows, which could be extremely high probability. So, with that being said, hopefully you took something away from this episode. Really enjoyed this one. Hopefully you took something away that you can add, or maybe even query certain things within your trading models, trading plans. And yeah, I'm going to leave this one here. Hopefully catch you in the next one. And stay tuned to see what happens with this potential high probability trade model forming at the lows. So until then, I'll catch you in the next one.